Disney earnings are in focus after the company pared its losses in its really important streaming business. Let's bring in Disney CFO Hugh Johnston. Hugh, good to see you. It has been a while. Welcome back to Yahoo Finance. Let's start on that streaming business. The company pared its losses, the operating losses, to $18 million compared to $659 million last year. I guess one of the biggest questions investors are probably wondering, is that sustainable?
Yeah, good morning, Brian. We think it is. We feel terrific about the progress we've made on streaming. Obviously, we focused on both the cost side and the revenue side, and both are delivering. The streaming business grew 12% in the quarter, which is obviously a nice, healthy number for us. In addition to that, we're managing our spending much more efficiently. So we will go negative in Q3 a little bit more based on the timing of some cricket rights. But as we've indicated before, we'll be profitable in Q4, and we expect to build on that in 2025.
Yeah, it looks like you had a good, successful quarter, Hugh, in Disney Plus subscriptions. Now, that comes after Disney Plus took price hikes, in the fall of last year. Just given that momentum, do you think you have more room to push prices?
Yeah, we think we do. I think you're going to see prices steadily go up over time in the streaming service, mostly because the content we have is worth paying for. So obviously we generate a lot of our own IP, both on the television series side as well as on the movie side. And in addition to that, as we continue to build out the streaming service, in particular, putting an ESPN tile on later this year, and then adding ESPN flagship as an option next year, we think there's just going to be more and more value there for consumers, and they'll be willing to pay more for it.
On the streaming business, Hulu subscriptions only up 1%. Now, you're trying to, I guess you're working with advisors. You have come up with a valuation on what Hulu, that remaining stake, is worth. Comcast has its valuation. Do you even need Hulu as part of the portfolio? 1% growth, it's not mind-blowing to pay maybe potentially $28 billion for the rest of this asset.
So I'm not going to say much about a negotiation that I'm in the middle of. I've got a pretty good discipline about talking about deals after they're done and not before they're done. That said, we already own 2/3 of Hulu, so it's already largely a business that we are in control of. We'll see where the negotiation goes from here, but we're continuing to work our way through that.
Fair enough. On the linear operation, help investors understand this asset. So the sales were down, the profits were down. What do the next few years look like for this asset, and what do you have to do to improve operating profits?
Well, I think it's important to think about entertainment in totality rather than thinking about the individual parts, because essentially it's the same consumer. They're shifting from one distribution channel to another distribution channel. So as we see growth in streaming, obviously those are the eyeballs that oftentimes previously were in the linear business. I tend to look at it more in aggregate, and as I look at it in aggregate, I think we've got a business that's got the potential for good, healthy top line, and over time will actually increase margins on the streaming side as the linear side continues to erode a bit. That said, I do suspect we're going to hit a point where the linear business will start to level off, because people do choose to leave for certain reasons, and for a lot of people, they choose to stay. Eventually, we're at the point where it's just the stayers that will be there.
Is the business still being reviewed for further cost cuts?
Yeah, I mean, any time a business is losing revenue, you have to look at it for cost cuts. And I think the team is doing a terrific job trying to come up with creative ways to produce television programs more cheaply, share resources where it makes sense, take a hard look at really every dollar that's being spent and say, okay, is this one that's necessary, or are we better served cutting that dollar and putting it elsewhere in the business so that we can continue to drive growth as an overall company?
I'm sure you're watching, you and the team, Hugh, on what's going on, the drama around Paramount. Wherever that asset ends up, how does it impact your linear networks?
I'm not sure it's going to make much of an impact on us, to be honest with you. I know they've got a lot of sorting out to do over there, so we're not really a part of it. So I couldn't tell you where I think it's going to go, but we're sort of focused on making sure we deliver the best content to consumers with our business, and then we'll let the chips fall where they may.
Big quarter from the parks business, Hugh, especially international. What are you seeing there?
Yeah, the growth has been terrific in parks. 10% revenue, 12% OI, and the parks specifically component of it actually grew OI 13%. International continues to lead the way for us, and it's very broad-based. All the parks are making money now. We're seeing very strong business in Paris, very strong business in Shanghai. In addition to that, the Hong Kong business is doing well, and the business in Tokyo has been quite strong. So feel very, very good about those businesses, and candidly, I think we've got lots and lots of potential future growth in parks on the international side.
I'm one day into the Milken Conference, Hugh. That's why I'm doing this interview, and lots of chatter, I think, on signs of a U.S. economic slowdown. Of course, we had some problems or slowdown in the recent GDP print. Are you seeing any signs of a slowdown in summer bookings at Disney?
We haven't seen any of that at this point, so we certainly feel good about that. Now, as I understand it, the lower income consumers, sort of in the lower deciles, are the ones that are feeling the pinch a little bit more. But even for those consumers, the family vacation is one that's kind of a priority for people. So when they're making decisions around what to cut, we typically get cut a little bit later than most. So still feeling good optimism about travel in the U.S. and in particular feeling good optimism about people coming to our parks.
Before you came to the company, Hugh, as CFO, there was a target put out there on capex investing in the parks business. Really, it was a mind-blowing number, $60 billion over 10 years. Now, the capex increased slightly in the most recent quarter in the parks business. Are you still committed to that $60 billion number?
We are. That number is still very much intact. Now, keep in mind, that's not an incremental number. That's a total spend. On a normal basis, we probably would have spent somewhere in the $30 to $40 billion range anyway. The reason we're doing it is the parks business has so much in terms of growth opportunities. The returns on invested capital are terrific in that business. The margins, as you know, are in the mid to high 20s. So if you're going to invest, those are the types of businesses you want to invest in. And I think we're going to get terrific returns for shareholders out of those investments.
And lastly, Hugh, of course, this is the first quarter earnings being reported after the battle with activist Nelson Peltz. You battled this guy twice. Of course, at PepsiCo now and coming here at Disney. What has this experience been like, and what is it like for a big company like Disney to go through this type of situation?
Well, candidly, it was a bit of a distraction for a couple of members of the senior team. That said, look, the management team under Bob is focused on creating value for all the shareholders, not just one or two of the ones that tend to be a little bit more talkative. And as long as we keep our eye on delivering value for all the shareholders, I think we'll be in a terrific spot going forward.
Well, Hugh, I didn't slip and almost ask you a PepsiCo gross margin question, so I'm proud of myself, and I am proud of you for not even bringing up the company. Hugh Johnston, always good to see you. Thank you for making time for Yahoo Finance. We appreciate it. We'll talk to you soon.
Thanks, Brian. Great to be with you guys.